Just confirm when we are live. I think we are live now. So friends, indeed, a warm welcome to one and all. I CA Pratik Neve. Welcome all of you to ZEST Learning. How are you all doing? I hope you all are doing wonderfully well. So friends, this is our CA final batch of sum solving. Yes, sum solving for GST and customs. And I know you are loving it from past 4 days. So this is our day 5, or you can say session 5. In this session 5, our discussion will be on value of supply, especially the rules part. Yes, the value of supply rules part, that's what we will be doing today. If time permits, we'll be also going to input tax credit. I hope friends you all have subscribed to the channel and hit the bell icon so that you don't miss out on any important videos and notifications. Friends, where will you get the PDF notes? So please check the description to this video. You can go ahead and check that. You will understand how you have to go ahead with the app and all the things. So friends, we have till now done scope of supply, RCM, exemptions also we have covered. Yes, time of supply, place of supply, and today some questions of valuation we did yesterday also. Today doing balance question of value of supply and also going to ITC to the extent possible. Fantastic. So friends, let's get started. Value of supply is somewhere on page 41, and if you have not checked earlier sessions, go ahead and check that as well. There is a playlist we have done, so you can take advantage of that playlist also. So now going to the value of supply. Yesterday mostly we did those questions where there was involvement of purely section 15. Okay, that means assessable value shall be transaction value. Okay, that is price actually paid or payable for supply of goods or services or both, where supplier and recipient of supply is not related to each other and price is the sole consideration. That's what we have done. And then what all is to be included, we have considered that in the value, and what is to be excluded, we have subtracted that. That is discount especially. Okay, so we have done enough questions on that. Now let's go ahead and do questions on rules. So friends, when do we have to go to the rules? So CGST rules for value of supply are given in 27 to 35. Okay, so we are going to apply that now. And when we go to the rules, we go to rules when AV cannot be taken as TV. Why AV cannot be taken as TV? Because supply recipient of supply are, maybe they are related to each other, okay, or price is not the sole consideration. If something like this happens, then we have to go to the rules. So yes, via these questions we will see now how to apply those rules. So I will keep on telling you as usual. So see, also for your advantage, keeping the solutions open with me, all of you. See the first question. I'm on page 41. Tech Experts Solutions Private Limited, registered in Karnataka, supplies technical consultancy services to its clients. Very good. It has been providing technical consultancy services to Innovatech Limited, Bangalore, for the past 2 years. The consideration for services is settled assignment wise. On 10th Feb, Innovatech Limited paid 45 lakhs to Tech Expert Solutions Private Limited in exchange for an agreement that Tech Expert Solutions will not provide similar technical services to any business entity in India or abroad for a period of 8 years. Okay, so friends, this 45 lakhs is received. Okay, and what is the consideration for this? I mean, why we have received this 45 lakhs? It is received against an agreement that we will not provide such services to any other business entity in India for abroad, India or abroad. So in short, this 45 lakhs is received, okay, under an agreement to not do a particular thing. Okay, so it is refraining us from doing an act. So refraining from doing an act is also supply. So against that, we have received consideration of 45 lakhs. So yes, will 45 lakhs be chargeable to GST? Answer is yes, because it is considered as supply under GST. Our Schedule 2, what is Schedule 2 of CGST Act? Certain activities are called either as supply of goods. Okay, means certain activities are called as supply of goods but not supply of services, and certain activities are called as supply of services but not supply of goods. In that, it is mentioned that, if you refrain from doing any act, it is a supply of services. So yes, this will be supply of services. It will be chargeable to GST. You are required to examine, this Tech Expert Solutions, that is the supplier, feels that this 45 lakhs is not chargeable to GST. That is the opinion of Tech Expert Solutions Private Limited. You are required to examine whether the view taken by Tech Expert Solutions Private Limited is legally valid. So of course it is not legally valid. Calculate the GST liability considering that technical consultancy services provided by Tech Experts Solutions Private Limited are otherwise chargeable to GST at 18%. So in short, the rate of GST is 18%. Innovatech Limited is not willing to pay any additional consideration or to pay any additional amount apart from agreed consideration. In short, in short, 45 lakhs is including GST. 45 lakhs is 100 plus 80. So 18, that is GST is how much? So calculate 45 lakhs into 18 divided by 118. So your GST is 6,86,441. So your assessable value will be 45 lakhs overall value minus GST. So what is that? It should be 38 lakh 13,559. 38 lakh 13,559 should be assessable value. I hope all of you got it. Given figure of 45 lakh was including GST. Okay. So see. Now see, only point is, that's it. Now see, only point is, so we did that calculation for the excluding GST, that is done as per rule 35. Because when value of supply is inclusive of GST, then the calculation is done the way we did. Given that the amount received, so it's not 60 lakhs, amount received is 45 lakh, is inclusive of GST. The value of taxable supply is determined as under. So value of taxable supply will be 45 lakhs into 100 divided by 118. This way also you can do directly. So yes, you will get the answer as we discussed. It should be 38 lakh 13,559. So assessable value is 38 lakh 13,559. Now if you want, on that calculate GST. Okay, on that directly calculate GST. Now 38 lakh 13,559. If you want, you can calculate CGST and SGST separately at 9% each. It will be 3 lakh 43,220. 3 lakh 43,220 each of CGST and SGST. Is it absolutely clear to all of you? May I go ahead? So this was your value. Sure, lot of time we have spent on this now. Let's go ahead. Nimiji, clear? And who else is watching the session? Is it absolutely clear to all of you? Now, even our third question is pending. Second we had done yesterday. So go to third question. Let's see. Kunal Verma is lawful owner of residential building located in Hyderabad. Property consists of 4 floors. So property has 4 floors. Out of this, first and second floors are self-occupied, while the third and fourth floor are let out. Okay, so Kunal Verma ji has let out third and fourth floors for residential purpose. So letting out for residential purpose to an unregistered person is exempt from GST. But let's see to whom we have let out. Sanjay Kapoor, Mr. Sanjay Kapoor, who is registered. Okay, he's a tenant on third floor. So yes, there will be GST because it is supplied to a registered person. He has surrendered his tenancy rights to Mr. Rohit Malhotra, unregistered person, for tenancy premium of 7 lakh on 1st October. Rohit Malhotra has paid the applicable stamp duty and registration charges for transfer of tenancy rights. Additionally, Rohit Malhotra will pay rent of 65,000 to Kunal Verma starting from October. You are required to determine value of taxable supply for the month of October in the hands of Kunal Verma, okay, who is new tenant, Kunal Verma, who is the supplier, and Sanjay Kapoor. Sanjay Kapoor, who is the original, you can say, tenant. Okay, so see, for Kunal Verma, who is the owner, the rental income received from residential property is exempt from GST. Okay, so he doesn't have to pay any GST, the supplier. And the surrender of tenancy rights for consideration of 7 lakh is a taxable supply. So yes, on that surrendering the tenancy rights, Sanjay Kapoor will have to pay GST. Okay, thus the value of taxable supply is 7 lakhs because he has got the consideration of 7 lakh rupees against considering the against surrendering the tenancy rights. Is it clear to all of you? Shall we go ahead? So let's now go to question number 4. Now question 4 is more tilted towards exemption. Okay. Now of course in value of supply there will be questions which will be tilting towards exemption. How? Because whatever is exempt, you take its value as dash. Whatever is taxable, you consider its value. So let's see. Rohan Malhotra registered as a regular taxpayer means in section 9 has under GST in Bangalore. Karnataka since July 2018 had a turnover of 2.5 crore in the previous financial year. He provides following information regarding various outward supplies, means regarding various supplies made during the month of May. Details of outward supplies for May 25 is given. Now we start with service by way of storage or warehousing of raw vegetable fibers. Okay, so it will become taxable. If we talk about storage of agricultural produce, only that is exempt. But this is storage of fibers. This will become taxable. Then supply of an online mathematics journal to whom? To Elite International School for its secondary and higher secondary students. This is also taxable. This cannot be exempt. Why this cannot be exempt? Because exemption is for what? When any college, means any education institution which is of second category. Second category means they are giving degree under any law for time being in force. Okay, not schools. So school is category 1. A school giving education up to 12th standard. Okay, category 2 is what? The colleges. And category 3 is those who give that services which are vocational, in vocational education. So basically, supplying journal only to category 2 is exempt. Here it is given to secondary and higher secondary students, school students. So this is not going to be exempt. This is going to be taxable. Next, composite supply of goods and services to Karnataka State Development Corporation, a government entity, by way of an activity in relation to functions entrusted to Panchayat under Article 243G of Constitution. The value of goods constituted 20%. Very good. So basically, this will become exempt. Why this will become exempt? Because value of goods is, yes, 20%. So we can call it as supply of services. So this will become exempt. Next, sitting fees for received for attending committee meeting as an independent director. Here the liability to pay GST is of recipient of supply on reverse charge mechanism. So I will not be liable to pay GST because director giving the supply to company, the liability to pay GST will be of company. Insurance commission received as an insurance agent from ABC Insurance Company, who is liable to pay GST, is again a recipient of supply on RCM basis. So I am as a supplier not liable to pay GST. Next, services provided to state government of Karnataka for conducting fitness training program for its employees, where 75% of total expenditure incurred for program was borne by state government. So this is exempt. Honorarium received by Rohan Malhotra to appear as guest anchor on TV channel. This is going to be taxable. There is no question of exempting it. An amount received for service provided to recognized sports body. Friends, you know, service provided to recognized sports body as a player, umpire, coach, or team manager is exempt, but this is given as a commentator, so this will be taxable. Clear? Go ahead and check. So see, storage of or warehousing of raw material and vegetable fibers, this is going to be taxable supply. So you can directly calculate GST also if you want, or you can first calculate the value of supply and then calculate GST separately. Then online journals, but it is to a school, so it will become taxable. Okay, exempted only if given to any education institution providing any degree, and that to degree in India. Then composite supply of goods and services to Karnataka state development entity under Article 243G of Constitution. Now this will be exempt. Why it will be exempt? We will take it as a composite supply. So please exempt it. Why exempt it? We will take it as a composite supply, okay, of services, means composite supply where the supply of goods is up to 25%. That's why it is exempt. Sitting fees, as we discussed, it will be taxable under RCM. So we are not paying any GST. Insurance commission, same, taxable on RCM, so we are not paying any GST. Services provided to SG for conducting fitness training program. So basically any training program conducted for government where government is paying 75% or more of expenditure is fully exempt. So that is also going to be exempt. And as we discussed, honorarium received, okay, for appearing as a guest anchor. So let what is received be called as honorarium. That doesn't make a difference. It is a consideration for appearing as a guest anchor. It is fully taxable. Then services provided to a recognized sports body as commentator, that is going to be taxable supply. So this way, what you could have done is, you could have done computation of value of supply and GST payable, okay, for so and so month, particulars, amount rupees, and then you would have first got to the value of supply, then separately calculated CGST and SGST. So you can do that combined working also. No need to calculate separately GST on each taxable supply. Is it clear, all of you? Okay, fifth we had already done, sixth also done, seventh. May I go to seventh now? In seventh question, what they are asking me, let's see. Titan Machinery Private Limited, a manufacturer of heavy machines registered in Ahmedabad, Gujarat, supplied one machine, huh? to Orion Engineering Limited located in Gujarat. So basically, this supplier is of Gujarat. Recipient of supply is also of Gujarat. So it seems to be intra-state supply. Using the information provided below, compute value of the machine. So yes, we'll have to calculate value of the machine and GST payable. So IGST is not applicable in this case. It's an intrastate supply. So we will calculate CGST and SGST. In cash, not total output tax, they are asking us to calculate net GST payable. Now what is net GST payable? Net GST payable is output tax minus input tax credit. Clear? We have to do that. Then you have to assume the following GST rates on machine. So we are bothered with CGST and SGST. Let's see. Let's first focus on calculating output tax. Okay. See, basic price of machine 32 lakhs. Trade discount allowed. Please, you'll have to minus it. It is shown separately in the invoice also. Secondary packing, okay, charges for safe transport. So secondary packing is an inclusion, because any packing, if you don't do packing, your supply won't be complete. So this expense is an incidental to supply. So as per section 15 2C, you will include. Same with design and engineering charges. Taxes levied by municipal authority. So as per 15 2A, you will include any taxes other than GST. Then subsidy received by supplier from state government to encourage manufacturing. Neglect, because it's a state government subsidy. And further, it is not even linked to the price of the goods. Then pre-delivery inspection charges paid to independent agency who has paid as per supply agreement paid by Orion Engineering, means recipient of supply has paid it on behalf of Titan machine. So this will be included. Why it will be included? As per 15(2)(b). If any amount, I am supplier, for me, if any amount you are paying, means I had a liability towards someone, that liability recipient of supply, that is you are settling, then friends, assessable value goes up to that extent, because any amount incurred by recipient of supply on behalf of supplier is as good as an extra benefit for the supplier against the goods which he is supplying. So it should be included. Then interest paid for delayed payment. So you know, interest also has to be included as per 15(2)(d). Okay. Any other information? See, additional information. Titan Machinery has no ITC balance at the beginning of March. All other conditions necessary for availing ITC have been fulfilled. There are no other transactions of supplies during the month of March, and Titan Machine and Orion Engineering are not related persons. Very good. So all possible information is given. Only thing is, read this. Basic price of machine is 32 lakhs. So any other packing cost, etc., which they have given separately, they must have recovered it over and above 32 lakhs. So whatever we are saying as inclusion, you should keep on adding that. Clear? You should keep on adding that. Fine. And how much ITC you will get? There is a IGST paid on food items for consumption by factory employees. You know that here ITC is blocked as per 17(5)(b). ITC is not allowed on outdoor catering services or food and beverages. Okay, so no ITC. And SGST and CGST of 18,000 each paid on electrical transformer used in manufacturing process. Fantastic. So these are capital goods. So on capital goods, ITC is allowed. So 18,000 of CGST and 18,000 of SGST, this much ITC you can take. There is no opening balance. Now let's go ahead. First, let's calculate value of supply, and then on that let's calculate CGST, SGST output tax, and then subtract 18,000 each of C and SGST ITC, and then we will get net GST payable. Now see, as we discussed, start with 32 lakhs, subtract discount as per 15(3)(a), then include secondary packing, design and engineering charges, taxes levied by municipal authority, subsidy not addable, thanks to 15(2)(e), which says that subsidies linked to the price of the goods other than central and state government subsidies are to be included. But this is a state government subsidy, so it is not to be included. Okay. And not to be included. Fantastic. So don't do anything. Just neglect it. Pre-delivery inspection charges we are adding as per 15(2)(b), because this is the amount paid by recipient of supply on behalf of supplier. Interest paid we have to add as per 15(2)(d). One only small point I would like to tell you. We have received interest of 15,000. I have assumed that it is received including GST. So what we have done is 15,000 is equal to 118. Getting it? 100 plus GST. So 100 is how much? So 15,000 into 100 divided by 118. We will add that and write it as an assumption that we have assumed that no separate GST is recovered on the interest part. So 12,712. So this way, take on your calci 32 lakhs minus discount of 96,000 plus 40,000 plus 1,10,000 plus 30,000 plus 28,000 minus 12,712. Sorry, plus 7,000, 12,712. Are you getting 33 lakh 24,712? So on this, calculate GST at 9% each. You are getting 2,99,224 each of CGST and SGST. Okay, so you will make a separate statement for that saying computation of GST liability or net GST payable. You will get output tax first less ITC of rupees 18,000 each. ITC of CGST shall be utilized to pay output tax of CGST and balance, if any, to pay output tax of IGST. But there is no output tax of IGST and there is no balance also of ITC of CGST. And then ITC of SGST will be utilized to pay output tax of SGST. Okay, that's it. You will get net GST payable 2,81,224 will be your net GST payable. Is it 100% clear to all of you? Very nice question. Let us go ahead now on question number 8. See, thank you so much friends for liking the video and subscribing to the channel. Going to now 8th question. Messrs. Velocity Motors Private Limited, registered automobile dealer, sells a motor vehicle worth 25 lakhs to a customer in retail market. Okay, so motor vehicle 25 lakhs. The payment is made as follows. 6 lakhs is paid in cash and balance amount of 19 lakh is paid by check. Is TCS of 206C of Income Tax Act 1961 applicable in given case? So you know what? TCS, this is TCS of Income Tax Act. Is it applicable in given case? Yes. When the value of motor car exceeds rupees 10 lakhs, then this TCS is applicable. This TCS is at 1% of value, means 1% of the price of the car. Who will collect this? The supplier. Supplier means the person who is selling you the motor car, that showroom will collect that TCS. I told you the rate of TCS is 1%. Now, what is the value of taxable supply? Okay, for GST. So for GST, in the assessable value, TCS is not included. TCS is not included in the assessable value. That is to be understood. Because TCS is just a mode of collecting income tax. TCS is not separate tax. What happens? Shopkeeper collects this 1% from you and pays to the government. And government puts it in your income tax account. Meaning to say, when you are the purchaser of this car, when you will go ahead to file your ITR, then you will get credit of this tax. So TCS is not original tax, it is just a mode of collecting income tax. So basically via TCS, government collects information from the suppliers of these motor cars, that is who are those people who could afford to take car in excess of rupees 10 lakh during the PY. So see, it's not a fresh tax, it is intermittent tax. So intermittent means just collected, just a mode of collecting income tax. Hence, the TCS should be excluded while calculating assessable value under GST. Okay, it is clarified by CBIC. Now see, applicability of TCS. Yes, TCS is applicable in the given case because sale of motor car vehicle is exceeding rupees 10 lakhs. Is it clear, Nimmiji? This is very important. Okay. So TCS will be at 1%. Who is required to collect TCS? Seller is required to collect TCS at 1% from purchaser while selling specified items, including motor vehicles, okay, beyond 10 lakhs as we discussed. Thus, Velocity Motors Private Limited must collect TCS from customer. Now, how TCS will be calculated? TCS is at 1% of 25 lakhs. The overall value of the car, if you observed, that was 25 lakhs. Where 19 lakhs was by way of check, 6 lakhs by way of cash. That doesn't make a difference. Now, value of taxable supply under GST is 25 lakhs. Okay, not 25 lakh 20,000. It is 25 lakhs. Okay, so this is assessable value under section 15 of CGST Act. And TCS is 25,000. Okay, and now you calculate GST on 25 lakhs at 28%. Percentage of GST was given. So it is 7 lakh. So how much you will recover from the customer is original 25 lakhs, the value, plus GST of 7 lakh plus TCS of 25,000. Clear? So this 7 lakh is 28% on this, and this TCS is collected separately. Is it absolutely clear to all of you? Yes. Let's go ahead. So why there could have been a confusion? Because it is stated that assessable value, that is transaction value, should include any taxes other than GST. So basically, that tax, you could have been tempted to add TDS in the value or TCS in the value, but don't add it. You understood the reason. It's not a fresh tax. Okay, it is not a tax on goods actually. It is just an advance way of collecting income tax. Okay, let us go ahead. Ninth question. Ready, all of you? Yes, sir. Messrs. Titan Industries Private Limited, registered manufacturer in Andhra Pradesh, sent steel enclosures worth 65 lakhs under delivery challan to Messrs. Nova Engineering, registered job worker in Andhra Pradesh, for job work on 15th Feb. The scope of job work included mounting the steel enclosures on the aluminum frame and sending the mounted panels back to Titan Industries Private Limited. If you remember, we had done one question of job worker in the scope of supply topic, or one of the earlier topics. Manoj was the name of one of the name involved in that question. So see, we are not doing job work for the first time in this batch. So let me tell you, Titan Industries Private Limited is principal here, and Nova Engineering is a job worker. Okay, so TIPL is sending some goods to any Titan Industries registered manufacturer in Andhra Pradesh, sent steel enclosures worth 65 lakhs. So the steel enclosures are sent. Registered job worker will do the job work. The scope of job work included mounting the steel enclosures on aluminum frame and then sending the mounted panels back. Mounted panels will be sent back. The aluminum frame is supplied by Nova Engineering. Okay, so Nova Engineering, while doing their job work, gives goods also. That's okay, but it continues to be job work service, as you all know. Nova Engineering has agreed to a consideration of 7 lakh for the entire mounting activity, including supply of aluminum frame. During the mounting process, metal scrap is generated. Nova Engineering sells it for 60,000. Nova Engineering sent the mounted steel enclosures and aluminum frame back to Titan Industries on 8/11. Very good. You should check that also, whether the goods are returned within 1 year from the date of being sent. So they were sent on 15th Feb and they are returned on 18th of November. So yes, it is within 1 year from the date of being sent. So no complication. Compute GST liability of Nova Engineering means they are asking us GST liability of that job worker. Provide a reasoned explanation for inclusion or exclusion of value of steel enclosures in the job charges for the purpose of GST payment by Nova Engineering. So basically friends, Nova Engineering has charged for job work to TIPL 7 lakh rupees now. So 7 lakh will be the assessable value. Okay. And even if job worker uses some goods to do his job work, then obviously its value is deemed to be included in this 7 lakh. And supply of job work is treated as supply of service, even if he is using some goods in that. Provide reasoned explanation for inclusion or exclusion. That's what we have to do. Rate of GST for aluminum frame neglect. For job work, the rate is 18% now. So on 7 lakh, the GST will be at 18%. And when that Nova Engineering is selling metal scrap, then also on that also GST will be applicable. So let's see. See GST calculation. See, since Nova Engineering is engaged in job work, consideration for job work, which includes mounting and steel enclosures on aluminum frame, is 7 lakh. So in short, 7 lakh is your assessable value and GST will be at 18%, that is 99% each, because job worker and the principal, they are in the same state, means location of supplier and I will say place of supply is in same state. That's why it is intra-state supply, and that's why you have charged CGST plus SGST. And on metal scrap, the rate was given as 12%. So on 60,000, you will calculate at 6% each, because the recipient of supply who is receiving this metal scrap, he is also in the same state. So again, intrastate supply, GST rate on that was 12%. So 6% each, CGST and SGST. Make sense? So of course, there will be combined questions. So this question involved job worker, principal, and value of supply and scope of supply, all concepts. Very good. Next, Aquatic Solutions Private Limited is supplier of water coolers. Company supplied water coolers to Blue Wave distributors for 3,54,000, including GST of 18%. In short, you know that 354 into 100 by 118, 3 lakh will be the value for which they have provided the water coolers. Who? Aquatech Solutions Private Limited. So they are suppliers and they have supplied to whom? Blue Wave distributors. Okay. So Blue Wave distributors is recipient of supply. See, main is this visualization. If you can visualize the things, then you can solve them. Okay. Additionally, Blue Wave distributors provided some materials to Aquatic Solution Private Limited. Okay, so basically 3 lakh rupees is not sole consideration because 3 lakh plus material. The amount charged for the cooler is consideration paid for the cooler is 3 lakh plus material to Aquatic Solutions. So price is not sole consideration. Where price is not sole consideration, assessable value is open market value. Open market value. So you can't take 3 lakh as assessable value. So AV is not 3 lakh. Clear? So in such case, how to calculate AV? So there is a rule number 27 where price is not sole consideration, then assessable value is open market value. How to calculate open market value? So as part of consideration, the materials value is 12,000, but neglect materials value firstly because rule 27 has a clause which says that accessible value will be open market value. So let's see in additional information. Aquatic Solutions Private Limited has supplied same type of goods to another buyer for 3,57,600. Wonderful. Including GST at 18%. So friends, 357,600 into 100 upon 118 is the open market value. So it is 3,03,051. So accessible value will be 3,03,051. Because what is the meaning of open market value? At what price you are selling such goods to other buyers who are unrelated, where price is sole consideration, and that should be excluding GST. So ASPL is selling such goods to others who are unrelated. At what price? At 357,600. But that is including GST. So just exclude GST from that and you will get open market value. So it is 3,03,051. All of you clear? And what would be the price? What would be the answer if price of 357,600 is not available? No problem. If that is not available, then accessible value will be 3,12,000. Ask me how. 3 lakh is the price, it's a transaction value, and 12,000 is the value of material. Can you see? It's the value of material which is provided by the recipient of supply to the supplier. So basically, as per rule 27, go in the sequence. Clause A talks about open market value. If that is not available, then go for transaction value in money plus value of consideration which is not in money. If that is also not available, go to clause C. Clause C is value of supply of goods and services of like kind and quality. If that is also not available, then you have to go to rule number 3031. Clear? So see, as per 27A, we have gone for open market value. So open market value, as we discussed, is 3,03,051. And then as per 27B, what we should do, if A cannot be applied, means if open market value is not available, we should take price plus value of consideration, okay, in money terms, that is 12,000. So 3 lakh 12,000 would be your assessable value. Did you all understand, friends? 100%. Okay, we are doing next question, that is 11th one. It is for life insurance services. Its valuation is given in 30 to 4. But remember one thing, 22nd September onwards, life insurance have become exempt from GST. So chances of this being asked is very less. Okay. So we'll do one thing. We'll do the question, but only one question, and you give least importance to this. Because if something is exempt, there is no question of GST on that. So why will you calculate value? Isn't it? So this being asked, chances of this being asked is very less. Now what happens in life insurance? The term policy means only risk cover is there na, that is 100% insurance. Okay, means it is called as term policies. So in term policies, this entire amount becomes assessable value. 100% of the amount becomes assessable value. But when we talk about endowment policies, which policies? Endowment means other policies which are not term policies. They have got two elements. They have got savings element and they have got insurance element. GST is only on the insurance part. And how much is insurance part is given in the rules, because mostly the insurance companies won't bifurcate that the premium which they are taking, that premium is how much is towards savings and how much is for insurance. So that work is done by rule 32 sub rule 4. So when it is a premium which is a first year premium, assessable value is 25% of the premium. So 50 lakh into 25%, it will be 12 lakh 50,000. Renewal premium, that is second year onwards, whatever premium is collected, in that case assessable value is 12.5%. So 90 lakhs into 12.5%, 11 lakh 25,000 will be the assessable value. And in single premium annuity policies, 10% of premium is the assessable value. So in this case, it will be 12 lakhs. So take total 30 lakhs plus 12.5 lakhs plus 11.25 lakhs plus 12 lakhs. 65 lakh 75,000 will be the assessable value. See this, 65 lakh 75,000 is the assessable value. When it is only risk cover, means it's a 100% insurance product. So assessable value is 100% of premium collected. When it is simple thing I did, friends, when it is a mix of what? Insurance plus savings or investment, then we have to divide into what are those two things. One is it could be single premium annuity policy. For single premium annuity policy, assessable value is 10%. Then it could be any other. In any other, there are two possibilities. It could be first year premium, it could be subsequent premium. For first year premium, it is 25%. Assessable value is 25% of the premium. And for subsequent year premium, it is 12.5%. That's exactly what we did. Shall we go ahead? Yes, friends. So it is about 1 hour of session today. Have you enjoyed it? Have you understood it till this point? We are going deep in the value of supply. So if you see section 15, though we have done in depth. Apart from that, in rules 27, rule number 27 question we have done, and right now we did 32.4. And as we go ahead, we'll keep on encountering questions on other rules also. See, next one. Zenchem Industries Private Limited, registered in Himachal Pradesh. This is supplier registered in Himachal Pradesh, has supplied 30 tons of chemical at 55,000 per ton, including taxes, to Omkar Enterprises, also located in Himachal Pradesh. On 12th October, okay, so and so date. So this is time of supply. 12th October is time of supply. The invoice is also issued on the same date. Additionally, he got following extra charges. So basically 30 tons into 55,000 per ton. That is the original value. 16 lakh 50,000. Apart from 1650, he got freight charges, packing charges, payment charges. You know, they are all expenses which are incidental to supply. So they should be all included. Then cost of special instrument purchased by Zenchem Industries Private Limited for manufacturing the chemical. That won't be added because that he would have already considered in 16 lakh 50,000. Acha, but these charges were levied to Omkar Enterprises. So you'll have to, if you have taken that amount from Omkar Enterprises, you'll have to add it. Now, additional information. As per the contract terms, Zenchem Industries Private Limited, means supplier, is required to get the chemical inspected by independent testing agency before delivery. The inspection charges of 15,000 were directly paid by Omkar Enterprises to the testing agency. Friends, Omkar Enterprises means recipient of supply. So recipient of supply has directly paid 15,000 to third party on behalf of supplier. So friends, any amount or any expense incurred by recipient of supply on behalf of supplier would be included, as I discussed with you some minutes back. So please include it. Zenchem Industries Limited also received 55 lakh as subsidy from state government. Neglect. It is first of all central or state government subsidy. Neglected. Okay. And it is for it is for manufacturing plant. It is that subsidy which is not even linked to the price of goods. It is a capital subsidy. Omkar Enterprises was required to make the payment within 15 days, but he delayed in the payment and 18,000 was paid as interest. Please include interest in the value of supply. Compute GST liability for this transaction. Determine due date of GST deposit. Okay. Now see, time of supply was 12th October. Okay. Here time of supply was 12th of October. So basically GST will be paid by 20 of next month. So GST's due date will become 20 of November. Is it clear to all of you? Yes, sir. So let's go ahead, friends. Is this batch helping you guys? Do let us know in the comment section. Do like the video and do share it with your friends who may need it. So see, 16,50,000 is what we start with. Freight charges added, packing charges added, weighment charges added, cost of special instrument added, direct prepaid by means amount incurred by recipient of supply on behalf of supplier included means added, government subsidy neglect. So get to the assessable value. Okay. Now calculate GST at 99% each given in the question. Now interest for late payment, assume that that was the only amount received. On that GST is not received separately. So 18,000 into 100 upon 118 will be the value of supply. On that calculate GST at 99% each. Okay. Now due dates. For the earlier means the GST liability on 23,65,000 means without considering the interest. For that, as we discussed, the due date will be 20 of November. Clear? But for the interest part, very amazing question actually. For the interest part, for the GST on the interest part, the due date will be check when the interest was received. When the interest was received, just check that. Uh, Omkar Enterprises was required to make payment within 15 days. However, payment was delayed until December. So I'm assuming that this 18,000 rupees of interest was paid in December. So for that, the time of supply is December. So due date of payment will be Jan 20. Here, time of supply is December. Why it is December? As per section 12, subsection 6 of CGST Act, for interest, late fees, penalty which is paid by recipient of supply for delay in payment, the time of supply is actual date of receipt of such consideration. So actual date of receipt of that consideration is December. Okay. And here time of supply earlier for the original supply was as per 12/2, date of issue of invoice or last date when invoice is to be issued, whichever is earlier. So nice question. Hope you have understood it, Nimiji. Can you confirm? See, after few questions, keep on confirming so that I get assurance that we are on the right track. Okay. TechMech Solutions Private Limited. So they seem to be supplier registered in Rajasthan. They have supplied machine to Vertex Industries. So Vertex Industries is recipient of supply. It is also in Rajasthan. Do you all agree? Very good. Yes, got it. Thank you for the reply. So Vertex Industries is also in Rajasthan. On 5th May, they have done this supply. Invoice for the supply was also issued on 5th May, making it the time of supply as per 12/2. And they both are not related. Question is, compute value of taxable supply. So I think easily we can solve it. basic price of machine excluding all taxes but including design and engineering charges and loading charges. Don't do anything with that because it should have been included and it is included. Don't do anything. Warranty provided, it is already included in the price. It's 2 years warranty, no effect. Extended 1 year warranty opted by Vertex Industries. Okay, so it was not compulsory. Consultancy charges include freight and insurance charges, include subsidy received from CG. Okay, so it is exclude, means don't do anything, forget it. Amount, additional amount received from the joint venture partner of Vertex Industries for ensuring timely supply. Okay, so basically this is in relation to supply only. And then cash discount on the basic price, discount is given as they have agreed to pay within 30 days. So exclude discount as per 15(3)(a). So this way, do the adjustments and find assessable value. See, basic price of machine 22 lakhs. So see, design engineering charges and loading charges. It's okay. This is a way of presentation we have adopted. But you could have directly started with 22 lakhs only. Doesn't make difference. Extended warranty you are adding because it is incidental to supply. Consultancy charges also you are adding. Freight also you are adding. And this also you are adding. But subsidy, as we discussed, neglect. You will get what? Now one thing is critical, that discount was of 1% on basic price of machine. So that is a bit tricky point. Discount was on 1% of basic price of machine. So yes, 22 lakhs is not basic price. It includes design and engineering charges and loading charges. So that's why from 22 lakhs, if you minus that, what? Design and engineering charges and loading charges, how much it will be? Actually, it would be 21,60,000. It would be 21,60,000. So discount will be at 1% of 21,60,000. So it would be 21,600. Clear? That would be the accessible value. Yeah. This would be 24 lakh 17,000. This would be 24 lakh 17,000. And 24 lakh 17,000 minus 21,600. So this would be 23 lakh 95,400. And then you will calculate GST on that. GST amounts would also change. Clear? Okay. Let us go ahead. Now, we are first going to do other questions, then come to this 9 tomorrow. What else we have selected for today now? Huh. We have selected this 17th. See 17th question. Zenith Industries owns a manufacturing facility in Hyderabad, Telangana. So this Zenith Industries has a unit in say Telangana and a distribution depot in Kochi, Kerala. Since Kochi depot operates in different state, it is required to obtain separate registration under GST, of course. And they both, as you know, are treated as distinct persons, means separate persons under GST. Even though they have same PAN, they have same PAN but different GST numbers. Now you know they are distinct persons. Whatever they send to each other, that will be treated as supply. Since Kochi depot, yes, that's done. Goods manufactured at this Telangana factory are transferred to Kochi depot where they are subsequently sold. From Kochi depot, they are sold and assume that they are sold to unrelated parties. Visualization happened? Done. Details of goods transferred and sold. Goods transferred from factory to depot. From this factory to depot, 1200 units are transferred. Price at the factory is 250. Price at depot is 270. Price at depot is 270. Goods actually sold at depot on 22nd April. This transaction happened on 10th April. Goods are actually sold on 22nd April. Doesn't matter, I think, because your only question is value of taxable supply of goods and IGST liability for Zenith Private Limited Hyderabad. Means for this Telangana unit, for this 1200 goods, what is the assessable value? That is the question. So friends, in such case, and see Kochi depot is not availing ITC. In such case, how to find assessable value? Okay, see, this is as per rule 28. Rule 28 is supply of goods between related persons. Supply of goods or services between related persons or between distinct persons. Okay, so in such case, you have to consider open market value. If open market value is not available, then 90%, rather, if open market value is not available, then a value of supply of goods of like kind and quality. Okay, but there's an option for this. Proviso is there. That is at what price the goods are sold, at what price such goods are sold from the recipient's location. Of that, you may take 90% as accessible value. So which question it is? 17th question. So see, so value of taxable supply will be 270. 270 was price of such goods at that Kochi's location. So into 1200 units for which we are doing the valuation, and friends, 90% of that. Why 90% of that? Because simple thing, I told you that Telangana unit was transferring the goods to Kochi, and from Kochi on such day the goods were sold at 270. Maybe some other units which were earlier received, or maybe these units, whatever, they were sold at 270. How many units were given by Telangana unit to Kochi unit is 1200 units. So valuation had to be done for 1200 units. Now as per rule 28, 270 into 90% will be assessable value. Why? Because logic is 270 is recipient of supply selling price. But we want assessable value here when Telangana unit sells to Kochi unit. So don't you think Kochi unit will be earning some profit now? So 270 is after profit. So cost between Telangana and Kochi will be, it is given in the rule, 90% of that 270. So 270 into 90%, assessable value per unit will be 243 into 1200 units. So 291 600 will be assessable value, and on that GST may be computed at 18%, which will be 52,488. Got it? And neglect on further date, what happens? We are bothered with that date when the goods were actually transferred within these distinct persons, because that valuation we want. We are least bothered with what happens on 22nd September, 22nd April. We are least bothered with that. Neglect it. Make sense? Yes, sir. Let's see. Let's go ahead. So now questions on similar lines, but you may end up applying another clause. See, Regent Industries Private Limited owns a manufacturing facility in Chennai, Tamil Nadu. So in Tamil Nadu, there is a manufacturing facility, and distribution depot is in Coimbatore, Tamil Nadu. Since the Coimbatore depot operates in different state, how different state? It is required to obtain separate GST registration. Assume they are in different states. Chennai TN and distribution is in Coimbatore TN. So actually same state, but for moment assume they are different states. Assume we are in different state. Then only the question makes sense. Please assume different state. Goods manufactured at Chennai factory are transferred to Coimbatore depot, where they are subsequently sold as is. So from here they are sold to unrelated party from the depot. Okay. The Coimbatore depot avails ITC on this transfers. Friends, Coimbatore depot avails ITC. Congratulations. So if Coimbatore depot is availing ITC, then there is a straightforward thing given that the open market value will be the price at which these two are dealing. The price at which the distinct person deal with each other, that itself will be open market value. Okay, that may be applied. Let's see. Now goods transferred from factory to depot, 1200 units. So we are doing valuation of 1200 units because 1200 units are sent. Price at factory is 240. Price at depot is 260. Goods are actually sold at depot on 15th May. We are least bothered with 15th May. We want the valuation to be done on 5th May. You have to determine value of taxable supply of goods and IGST liability for Regent Industries Chennai, means the manufacturing unit for them. Coimbatore depot is availing ITC. Valuation should be done as per GST rules applicable to distinct persons, means rule 28. Now see, 1200 units valuation we are doing, and at what price the goods are being sold actually from that factory, that itself will be deemed to be open market value. The transaction value itself will be open market value, and that itself will be taken as assessable value, that is this 240. So 1200 into 240 will be assessable value. See this? Clear? Yes. So shall we go ahead? Is this 28 clear? Now comes a question on rule 29. Ask me, 29 is for what? Principal is sending goods to agent. Friends, when principal sends goods to agent, of course, we have to call it as supply and it has to be valued. But how? Open market value. Okay, but if open market value is not there, or there's an optional way of valuation also. Optional way of valuation is at what price agent is selling those goods, selling such goods, of that you may take 90%. So see, Agrifine Exports Private Limited principal. So it is principal. It is supplier of organic almonds. It supplies them to authorized agent, NutriTrade distributors. It's an agent. The agent subsequently supplies organic almonds of similar kind and quality at price of 6,800 per quintal. So friends, 6,800 into, sorry, 6,800 into 90% will be the assessable value. This is at his choice he should take. So 6,800 into 90%, 6120, or the open market value. So additionally, another independent supplier supplies organic almonds of like kind and quality to NutriTrade distributors at 6,200 per quintal. So 6120 or 6,200 at the choice of that principal, the assessable value can be taken. So check 6120 or 6,200. Clear? This is as per rule 29 of CGST rules. Is it clear, all of you? Yes. Similarly, you can go through 20th question, not doing that now. Now go ahead and do question number 22. What is 22? Very interesting. Friends, what is question number 22? Now you know rule 27 is for what? Rule 27 is when price is not sole consideration. But 27 has its own clauses that take open market value. If that is not available, take money value plus value of consideration which is in kind, but take money value of consideration which is in kind. We have applied that today. If that is also not available, then take value of supply of goods of like kind and quality. But if that is also not available, then do the valuation as per 30 or 31. So 27 will eventually send you to 3031 if it can't give solution itself. Same way you have understood 28 is for supply between related persons or between distinct persons. And 29 is supply between principal and agent. Supply between principal to agent. You have understood these things. If 28 fails, it sends again you to 30. If 29 fails, it again sends you to 30. So in short, rule 30 is residuary. Residuary means if 27, 28, 29 provisions couldn't be applied, then you go ahead and apply 30. In 30, what you are supposed to do, you are supposed to take assessable value as 110% of cost of production or cost of services. Meaning to say, assume A has supplied goods to B, both are related, but you couldn't apply 28. But you couldn't apply 28. You come to 30. In 30, what you do, A has sent goods to B now. So, but there will be cost of those goods now. And you want to know the selling price, the ideal. So, in cost, add 10% profit margin. In short, take 110% of cost. That will become assessable value. Clear? So in this question, they are telling you to calculate the value as per rule 30. So some of the rule has failed, that is 27, 28 or 29 has failed. So they are asking you to do the valuation as per rule 30. Are you ready to do valuation as per rule 30? So you will have to calculate cost now. So cost of material, but it's given inclusive of CGST and SGST at 12%. You please find cost excluding that. So 125 into 100 divided by 112. You must be getting 1,11,607. Consider direct wages. Consider other direct materials. Computer is used for office purpose. That cost will not be taken. You want only cost for production. QC cost is for production process. Consider that. Engineering charges for installation of machine is not, for this particular consignment. It is overall cost. Factory overheads, consider it. Salary of staff appointed for office duty, don't consider. We want cost of production. Sale of scrap realized, minus it. Actual profit margin, neglect. Admin overheads, where 100% is for admin work, neglect. Selling and distribution overhead, neglect. Understood? Go ahead, take the total, and of the total, do 110%. You will get assessable value. So see, as we had discussed, 1,11,607 direct wages, other direct material, computer, QC, but it is installation of machine, nil. Other factory overheads, salary for office, nil. Office staff, nil. Sale of scrap, 2,200 minus. You will get total cost of production. Add 10% profit margin, or you can directly do 110% of this. You will get accessible value. 2,27,157 into 110%. 2,49,873. Is it clear? So it is like bonus. ओके, इसमें इंटर लेवल का कुछ नहीं है शायद. सो बेसिक क्वेश्चंस ऑफ वैल्यू ऑफ सप्लाई, दैट इज ऑफ सेक्शन 15, not the rules part. Section 15 part also we have done many questions involving 15.1, 15.2 and 15.3. Those questions relate to inter level also. So you can check. From yesterday we started doing value of supply. I think yesterday you were not there. Okay. So check yesterday's session also. You will get many questions of your level also. So 23rd I am leaving on you, 24th on similar case I am leaving on you. Now I am going to foreign exchange. Are you ready? Are you ready for foreign exchange? Foreign exchange services, should I explain you once? Okay. Yes. We'll try and do that, friends. Already, see, if you do now, if you are smart enough, if you do sessions, you will get it. Like if you do these sessions also, selected questions, you will do for inter level also. Isn't it? And yes, I'll try and do that. Something like Super 50 or something. We will do that. May not be possible, may not be possible like this series, but a single session can be brought for sure. Your request is taken. Make sense? I'll go ahead. Yes, sir. Fantastic. So I'll tell you the date. You please WhatsApp me on the number given here. For classes contact, I have given you one number here, right? You WhatsApp me. I will keep you in the loop. Okay? Fantastic. Now I will tell you in short, for foreign exchange, forex, how to do the valuation. Do you agree that there are two ways of valuation in case of foreign exchange? 32.2a, you just have to find profit that you have earned. In 32.2a, as the authorized dealer or as a bank, what are you earning on foreign exchange, that you have to check. How will you find out the profit? You have to find out the difference between your exchange rate offered and RBI reference rate. So RBI reference rate and exchange rate that authorized dealer has offered, we have to check the difference between that. So I'll guide you on that. If RBI reference rate is not available, then assessable value will be 1%. 1% of rupees involved in that transaction. And if none of the currency is rupees, then what you should do? Then you should check dollars, pounds, as the case may be, whatever it is. Dollars and pounds, both you should convert in rupees. Take 1% of both, and whichever is less will be assessable value. So now I'll guide you. So first let's focus on 32.2a. 32.2a, I would like to tell you one thing. It depends on the authorized dealer, that is the supplier, whether he wants to go for 32.2a or 32.2b. So in the same information given, I have been asked question of both value of supply under 32.2a and 32.2b. So see, Global Forex Solutions Private Limited, registered in Mumbai, operates as money changer company has undertaken following purchase and sale of foreign currency transactions. 1500 US dollars were purchased from Falcon traders of at the rate of 75, but RBI reference rate is 75.8. So friends, 75.8 minus 75.8 per dollar into 1500. This is the accessible value. So what is 0.8 into 1500? It is 1200. So accessible value is 1200. Understood? Then 2500 US dollars were sold to Avira Exports at 74. Okay, RBI reference rate for US dollar was not available on that day. So when RBI reference rate is not available, what you do? $2,500 into 74 into 1%. So 1% is deemed accessible value. It's given in the rule. So it comes to 1850. Clear? Check. We'll do that and then go to 32(2)(b). See what we did in first case. $1,500 into 0.8, 1200. Yes. See this. 32(2)(a). RBI reference rate minus transaction rate into 1500 US dollars, 1200. But where RBI reference rate was not available, where RBI reference rate was not available, then what did you do? Then you did 1% of 2500 US dollars into 70, 1850. Clear? Now I want to tell you that what happens in 32(2)(b). So you can do this or this as a dealer, either of the two you can select. But how to do valuation in 32(2)(b)? So it is as per slabs. Now what are those slabs? If your currency exchanged, friends, if your currency exchanged is between 0 to 1 lakh, then 1% of that, or 250, whichever is higher, between 1 lakh to 10 lakh, between 1 lakh to 10 lakh at 0.5% and above 10 lakhs at 0.1%. This is how you do the valuation. This is as per slabs NEME. Slabs you understand, right? So I will tell you now. But overall cannot exceed 60,000. Cannot exceed 60,000. Remember this? Now see, in first case, 1500 into 75, that much rupees are involved. 75 into 1500. 1,12,500 rupees are involved. Here, how will you find value of supply when 1,12,500 rupees are involved? So let me explain you. When 1,12,500 rupees are involved, let me show you. Can I show it to you here? So 0 to 1 lakh, okay, it will be 1,000 rupees because 1% of 1 lakh, and 1 lakh to 10 lakh, it will be at 0.5%. So between 1 lakh to 10 lakhs, you have 12,500 into 0.5%. So 12,500 into 0.5%, it will be 62.5. So your answer is going to be 1062.5. Getting it? So 1062.5, friends, that should be the answer. Please keep it in mind. Make sense? Shall we go ahead? And then in next case, what will be the answer? In next case, 74 into 2500, 1,85,000 was involved. Agreed, na? 1,85,000 was involved. So what will you do? 0 to 1 lakh, 1,000, and then 1 lakh to 10 lakh at 0.5%. So which will be 85,000 into 0.5%. 425. So total will be 1425. Yes. Clear? So further I will show you, in case we get something where the value is, I mean the currency in rupees terms is exceeding 10 lakhs, then what to do? That also we will discuss. But I hope this is as of now clear. Next, see, this is of insurance, you will do yourself. This is of insurance, you will do this as homework for sure. Similar question we have done. Yes, we want to do of air travel agent now. Air travel agent, how to do the valuation for air travel agent, that is covered in rule 32 sub rule 3, and that is an optional way of valuation. I'll discuss that with you. Again, this is policy, this will be homework. This is 32(5), second hand, sale of second hand car, we'll discuss that. Then 30 will be homework, it is on similar lines. This is also on similar lines. Then next one relates more to 18(6) of ITC. It's of CGST. This is of 32(6), the voucher that we will do. This is of forex. This is of actually customs. This relates more to customs. (36) is amazing. It is based on rule 33, pure agent. We should do that. Favorite of institute. Okay. So shall we go ahead and do this much? Yes, so what we were doing right now? This air travel agent. Okay. Let's start. In air travel agent, do you remember how the valuation is done? So whatever we are discussing, that is optional valuation. Optional valuation means if you want, you can, whatever commission you have received, on that commission you can pay GST. So see, Skyway Travel Solutions Air Travel Agency needs to determine its GST liability for quarter ended 30 June 2025 based on following. Basic airfare for domestic bookings is given. Basic airfare for international ticket bookings is given. Okay. So yes, on that basis we will do for as per 32(3). But before that, commission received is 5,20,000. So this is the actual value for this agent, and year-end bonus 75,000. So 5,20,000 plus 75,000, 5,90,000 is assessable value as usual without rule. And if you apply rule 32 sub rule 3, then you know in domestic bookings the value is deemed at 5% of basic fare. So 60 lakhs into 5%, that will be 3 lakh, and for international bookings it will be 10%, that is 9,50,000. So overall assessable value on deemed basis as per rule 32.3 will be 12,50,000. Clear? So it is your choice whether to go for 590 or 1250. So here it is not favorable to follow 32.3 because value is increasing. So see, 595 was the value when you were following regular method, and when you were following 32.3 it was 1250. So GST liability is higher under special provision in this case. So our entity should continue with regular method. Make sense? Yes, sir. Absolutely makes sense, isn't it? Now, as I told you, 29th. What is 29th? See, do you know that when we are dealing in second-hand goods, keep in mind one thing, when to apply that rule of second-hand goods. Very important, when supplier is doing supply to recipient of supply and where ITC cannot be availed. On the purchase, ITC cannot be availed. In that case only, you go to 30 to 5. Please now remember this. So now let's see. Elite Auto Traders, a car dealership specializing in second-hand vehicles. So second-hand and ITC cannot be availed. Then go to 30 to 5. In 30 to 5, assessable value is sale price minus purchase cost. So it purchased the used car from Arjun and subsequently sell the same to Miss Mira after performing minor refurbishments such as cleaning and repainting. Its sale price is 375, purchase cost is 3 lakh. So friends, assessable value is 75,000. Okay, it's given Elite Auto is not availing ITC on purchase of second hand cars. Okay, then only this rule is to be applied. So 75,000 is assessable value. Both are located within the state. Compute GST liability of Elite Auto Traders as per rule 32.5. Okay, assume GST at 28%. On 75,000, you can calculate at 28%. Means 14% each CGST and SGST. Acha, would your answer change if second hand car was sold for 2,75,000? So friends, if sale was for 275 instead of 375, but purchase cost is 3 lakh, so there is a negative value. So value cannot be negative. When value is negative, assessable value will be taken as nil. Clear? So see, our question in first case answer is 75,000. GST at 28% will be 21,000, and in second case nil. Make sense? Okay. Now you will be, of course, be able to understand. When you go ahead, you will be able to understand that in next one of the question they have asked that ITC can be availed. If ITC can be availed, do normal valuation. Normal valuation means at whatever price the dealer of second-hand goods is selling, that itself will become assessable value. Then this we will do when we go to ITC. So this will remain pending for tomorrow. Next. Okay. Now gift voucher. Novatech Electronics Private Limited, registered dealer in consumer electronics, issues a gift voucher worth 3,500 on 10th Jan 25. The voucher entitles the holder to purchase any item from Novatech's product range. The voucher was redeemed on 18th Jan. So basically, here time of supply is date of redemption of voucher. Date of redemption of voucher is the time of supply, because Novatech is allowing to redeem the gift voucher against any item. So supply is not identifiable at the time of issue of voucher. So time of supply is date of redemption of voucher. That's why 18 Jan 25 is time of supply. Value of supply is to what extent goods are purchased 2,100, and GST liability will be on that 2,100 at the rate of tax applicable on that particular goods for which the voucher is. Yes, see this. 18 Jan is time of supply, 2,100 is value of supply of the voucher, and GST liability is at 18%. That is the rate of GST on those goods which are purchased against that voucher. Now friends, going ahead, rule 33's last question for value of supply in today's session. Now rule 33, do you know what it is? That rule is very important from exam perspective. That rule is of pure agent. Whatever amount you recover, means I am supplier, and whatever amount I am taking from you, you are recipient of supply. I am supplier, you are recipient of supply. Whatever amount I am taking from you as a pure agent, okay, means for you I have paid to government 1 lakh rupees fees. So afterwards, if I take that 1 lakh rupees from you, then that amount will be excluded from value of supply. Meaning to say, on that there will be no GST. Assume you are my client and I am your CA. I am calculating your advance tax. Your advance tax is say 1 lakh rupees. You are not in India, you are my trusted client. I pay advance tax for you. Means I have your PAN and all. So I pay advance tax for you. Getting it? From my pocket right now. After say 2 months, 3 months, when you're back in India, I bill you 5,000 professional fees and 1 lakh advance tax reimbursement. So in this case, assessable value is 5,000 only and not 1 lakh 5,000, because 1 lakh I am recovering from you as a pure agent, as a reimbursement, which was, I had incurred it on your behalf. Getting it? So let's see now. So EE Private Limited, registered importer of industrial machine in Pune, Maharashtra, engaged Logiclear Consultants, licensed customs broker headquartered in Jaipur to handle all custom clearances formalities for a CNC milling machine imported from Germany. So friends, EE Private Limited, registered importer of industrial machine in Pune, okay, engaged Logitech Clear Consultants Private Limited, licensed custom broker. So this person is supplier to handle all custom clearances. Logiclear Consultants was also authorized to incur on behalf all expenses necessary to clear the machine at Mundra Port, Gujarat, and transport it to Pune's warehouse. Means supply recipient of supplies Pune warehouse. These expenses are reimbursable on actual cost basis, in addition to separate agency fee. So on the separate agency fee, there will be GST. In August 25, Logiclear Consultants issued the following invoice: agency fees 650. On this there will be GST. Unloading at Mundra Port, this is done for client and this is reimbursable. Transport from Mundra Port to Jaipur warehouse, this is also reimbursable, done for client. Transport from Jaipur to Pune warehouse, same thing. Custom duty, same thing. Dock dues, same thing. Port charges, same thing. So basically, from this point to this point, it is incurred as a pure agent. So it will be excluded while calculating value. But hotel expense, travel expense, telephone expense, please include. So take on your calci 6,50,000 plus 55,000 plus 60,000 plus 3,000. 7,68,000 will be your assessable value. 7,68,000 will be your assessable value. Check. So whatever is recovered as pure agent will be excluded as per rule 33. And one more thing I want to tell you, if that supplier charges lump sum 15 lakh rupees, means he doesn't show the amount separately, but he lump sum charges 15 lakh rupees, then friends, you cannot exclude anything. Then assessable value will be rupees 15 lakhs. So to exclude the things, what I should do, see, to exclude the things, I should show separately in the invoice. Means the example which I gave you now, that 1 lakh I have paid on your behalf to government as advance tax. Now when I make invoice to you, I should not say 1,05,000 is the professional fees plus advance tax paid. No, I should say 1 lakh reimbursement of advance tax and 5,000 my professional fees. Then only 1 lakh will be excluded and GST will be only on 5,000. Is it clear to you, all of you? Have you all followed, friends, today's session? It went for about more than 2 hours. So once what I'll do now, Nimi and all of you, once what I'll do, I'll sit and do the session wise index. Session wise index means so and so session, it went for how much hours, and questions from which topic we covered in that particular session. So that's how, that is also what I will do for you. And so now can I say that value of supply is also concluded? Yes. Tomorrow is 9th. Today we couldn't do ITC, but from tomorrow we will start with ITC, which has 50 questions. Okay, friends. So thank you so much for being such wonderful audience. Please do keep the channel subscribed, hit the bell icon so that you don't miss out on any important videos. Okay, thank you. Bye bye. Take care. See you in tomorrow's session. Surely check description to this video. You will find, you know, our link of the app and all the required things. Bye bye. And do like the session and share it with someone who may need it. Bye bye.